So in the first video, I said we'd talk about why bookkeeping is important from two different perspectives, the business perspective and the tax perspective. From a business perspective, there's really three big reasons why it's so important. And the first one, and I would say the biggest one, is it's about accuracy and decision making. There's so many business owners that don't keep track of what they're making and what they're spending at all. And it causes for a lot of people to fail. It's hard to make business decisions when you don't know what's going on in your business financially. You could have an expense that's just absolutely bleeding you that maybe there's a way to cut down on it, and maybe that makes you profitable. Things like that. So by keeping accurate books, it enables you as a freelancer or a business owner to make better decisions. It is paramount. And part of what goes into that is making sure that you keep your personal financials separate from your business financials. That is paramount, super important, because if you start mingling the two together, it becomes very messy, very, very fast. And you no longer have accurate financial statements, as far as the business goes, because you have personal stuff mixed in there. So do yourself a favor. Keep them separate. So through bookkeeping, you can achieve accuracy in decision making. The second reason is if you ever need a loan. If you have an online business, you're a freelancer that way. Might not pertain to you quite as much as if you're a traditional brick and mortar, maybe a construction guy. If you go into a bank to get a loan, the very first thing that loan officer is going to ask you for is your profit and loss statement. He's going to ask for your income statement because they want to see what you're making and they want to see who else you owe, everything like that. Same with a private lender. Private lender is going to ask for the same thing. They want to see how much you're making. They want to see how the business is doing, the health of the business. And lastly, if you ever go to sell your business, there's a lot of business owners out there that do startups and they grind it super hard for a couple years and then they sell it and start over. So, it's important to have accurate books, thinking about your exit strategy. When you're ready to sell your business, if that's a decision that you want to make, every potential buyer is going to want to look at your financial statements. They're going to want to see your income statement. They want to know how much you're making, just like those loan officers do. And put yourself on the flip side, right? If you're a loan officer, if you're a potential buyer, you're not going to give that loan and you're not going to buy that business without seeing those financial statements. And that's where the accuracy comes in as well, right? You don't want to start putting personal expenses in and mixing it in with business expenses, because now you're giving an inaccurate depiction of your business. So, say because you've done that for however many years or however many months, maybe your expenses are twice what the actual business expenses were. Well, that might turn off your potential buyer. That might be just enough to not get that loan. So there's a couple things to think about, why it's important to have good bookkeeping practices from a business perspective.